To Planning with Raven. If you are new here, make sure you hit that subscribe button, turn on the bell notifications. That way you don't miss out on any content that gets uploaded. If you are returning, as always, welcome back. Today's topic just kind of fell into my lap, you guys. I've been receiving a lot of questions around if the stimulus checks the US have been paying out, will they be taxable this year? And the answer to that is no. The reason why is because this payment is not income, and taxpayers will just simply not owe on it. Meaning the payment will not reduce a taxpayer's refund or increase the amount you may owe when you file your 2020 or 2021 tax returns. I'm saying 2020 and 2021 tax returns because we are on our second stimulus check, and there has been some commotion around if we'll be receiving a third one. If that does happen, it will roll over into our next year's tax filings. And before we dive into today's topic, which is indeed around what is different this year, I do just want to throw out some key dates that I believe everyone should be aware of if you aren't already. The first one is January 4th, W-2s are offloaded. January 10th, W-2s are available in the Payroll Tax Center for customers who use QuickBooks, who use ADP, and other payroll services for employers who pay out their employees. January 22nd, W-2 files are sent to the Social Security Administration. And January 31st, which is the date that we are all interested in, is the date W-2 forms are due to employees. So now that is out of the way, let's talk about some things that will be different this year due to coronavirus legislations and also inflation adjustments, which happen every year. So the first topic, waived required minimum distributions. So the Coronavirus Aid, Relief, and Economic Security Act of 2020, otherwise known as the CARES Act, waived the required minimum distributions, otherwise known as RMDs, from retirement accounts in 2020. RMDs are generally taxable income. This one-time reprieve means that some retirees will have lower taxable incomes for 2020 and thus possibly owe less in federal income taxes for 2021. So this is definitely one positive outcome in regards to the COVID crisis that we are, currently still facing. Number 2, higher standard deductions. So standard deductions generally rise each year on account of adjustments for inflation. This is nothing new. We should all be aware of that by now. The IRS reports for 2020 the standard deduction amounts for the following tax filing statuses are, drumroll please, married filing jointly, $24,800. This is up from $400 from 2019. Married individuals who are filing separately this year, $12,400. This is up from $200 of 2019. Head of household, $18,650. This is up from $300 from 2019. And then single, $12,400. This is up from $200 from 2019. And so for those of you who are like, I don't really know what she's talking about, the standard deduction reduces the amount of your income that's subject to federal taxes. So I'm going to give you an example. If you are a single person, if you're eligible to file your taxes single, and you choose to take the standard deduction, meaning you are not going to be itemizing your deductions on your 2020 tax return, you will not be taxed on that first $12,400 of your income from 2020. Anything after that, like if you make over $12,400, you are going to be taxed on that additional amount. That's basically what that means. So, number 3, higher income limits for the Savers Credit. So for 2020, the Savers Credit, it was formerly known as the Retirement Savings Contributions Tax Credit, has higher income limits. That effectively makes this little known tax credit available for more people, which is super duper exciting for our middle class people. So you might be eligible for this credit in 2020 if your adjusted gross income, or AGI, this is found on your actual tax return when you all get it, is not more than the following: married filing jointly, $65,000. This is up from $64,000 from 2019. Head of household, $48,750. This is up from the $48,000 of 2019. And then everything else falls into the same category. So all of their tax filing statuses, $32,500. This is up from $32,000. And so there you have it. 3 ways income taxes will be different for us here in 2021. If you have not yet, please make sure you subscribe, as I mentioned in the beginning of this video. Please comment if you have any feedback for me. I get a lot of emails actually from you all, and I am so excited to read those when I do read them, which is every day. So definitely, I appreciate the support as always, especially for my subscribers who are returning. And I will see you all next time.